We're now in the midst of geopolitical conflict. How serious is this situation beyond the headlines? Dubai property is making people rich, nervous, and sometimes reckless.
This is the biggest investment anybody will make in their entire life. Don't gamble with it.
Today, we're sitting down with a man they call the wolf of real estate.
And that was almost $1 billion dirham worth of transaction.
Dr. Mohanad Al Wadiya, CEO of Harbor Real Estate. He's seen the boom, the crash, the comeback, and the current challenges. People talk about going to the airport and seeing all these abandoned supercars.
I have to say something about this. It wasn't really true.
So we're asking him straight. With 25 years inside this market, what does he know that the rest of us don't?
That's a very good question.
Let's dive in. Dr. Mohanad Al Wadiya, thank you so much for being here with us at the MONIIFY studios. It's great to have you for this chat. Welcome to Money Moves.
Thank you very much. It's my pleasure.
CEO of a property firm, best-selling author, over 1 million followers on Instagram, and they call you the wolf of real estate. Why?
It's actually a nice story. Many years ago, the head of Dubai Land Department, who's retired right now, I remember walking into his office very early in the morning to discuss. I used to have a TV show on a weekly basis, and it was sponsored by the Dubai Land Department. One day when I walked in, he was like, "Here is the wolf. He just arrived." And I immediately told him, "What's with the wolf?" Because for me, the wolf comes with negative connotations.
Yeah, right.
And he corrected me. He said, in the Gulf culture, when somebody is really good at something, they actually give them the title wolf. And that's where the whole story started. And then the media picked it up and was in so many covers of magazines, TV shows, radio shows, and it's just stuck to me.
And actually, a little bird told me that you have met the wolf of Wall Street himself, Jordan Belfort. When did that happen?
Correct. Almost like 7-8 years ago, we met. We went out for dinner together.
What was he like?
He came here and his team actually called me. We went out for dinner. He was asking about real estate here.
Yeah, I bet.
And it was a nice outing. He's actually a very interesting personality.
I bet he is.
Yeah.
Some stories there for sure.
Yeah.
Getting into your background, you grew up in a real estate family and you were running the global arm of Dubai Holdings. So why break off to start your own thing?
It was a natural progression, Natasha. As you mentioned, I grew up in a family of real estate professionals for 4 generations. I'm the 4th generation. But I decided to break away from the family business to get on my own route, get my own learning. And that's what I gained from working with Dubai Holding. For so many years, I was the head of marketing, sales and research. I was overseeing 42 international projects for Dubai Holding. And just when the market was warming up, I remember in 2007, I decided to leave and join the family business. And the rest is history. I'm here today. I've seen a lot. I've seen the market go from the early steps of, I started when freehold wasn't even a thing yet. So I remember when only GCC nationals were allowed to own real estate in Dubai, the number of real estate consultants were a handful. We knew each other, all of us, to now having a truly global market with more than 33,000 registered real estate consultants and hundreds of developers, thousands of projects, and almost $1 trillion dirhams worth of transactions.
When did you make your first real money in property and how much?
First transaction I did was in 2001 or 2002. I mean, it was a big amount of money back then. But soon after that, I sold a plot, which is a very renowned plot in Dubai and this is the first time I say this in media. Myself and my brother, we sold the plot where the Hard Rock Cafe used to be next to Media City. And that was almost $1 billion dirham worth of transaction.
Oh my gosh. Well, very nice. Well done. I think it's still a lot of money now.
Yeah.
So you founded Harbor in 2006.
I brought the franchise of Harbor in 2006. Harbor is originally from Sydney, Australia. Founded by the late Jerry Groenewegen. He passed away 3 years ago. And we brought it here in 2006, yes.
Okay, so 2006. But 2 years after that, the global crash hit. What was that like for a business so young?
To be honest, it was a very scary times, but an amazing time to innovate and to create. I remember, I always say, by the way, the infamous economic crisis of 2008 was my first school. I learned a lot during that crisis. I learned a lot about how to manage people, how to run the business, how to grow a business during crisis times, and how to mitigate risk in the future. So that was my first, if you want, real experience as a CEO of a company. That infamous crisis, which by the way was marked as the second worst financial crisis in the history of humanity.
What were you seeing on the ground at that time? I mean, people talk about going to the airport and seeing all these abandoned supercars. And what were some of the things that really stand out in your memory?
I have to say something about this. It wasn't really true. This is what the West was trying to depict or portray about the Dubai property market. It wasn't as bad as you heard. I was there. I saw it. Yes, there were a lot of casualties because before 2008, we didn't have the real estate regulatory agency. So the legal framework that was governing the real estate market was not mature yet. Mind you, a lot of people made a lot of money. A lot of millionaires were created during the pre-2008 era. I've seen how people behaved during the crisis. Some people lost, but some people made a lot of money. I was very lucky. In fact, we grew a lot during 2008, 9, and 10. This is something that I'm very proud of. We managed to steer through the crisis, come up with new products, new services to cater for the needs of the customers and the market during these times. And we survived. I always say, by the way, survival is not for the fittest, it's for the most adaptive. So we were very adaptive during that time, and that's why we are still here.
How did you adapt? What made you so resilient?
So I'll tell you what we did. We started introducing new services. So I'll give you an example. During the 2008 crisis, a lot of people defaulted. They were not able to continue their payments. And a lot of developers also were not able to deliver their projects because people stopped paying, so they got stuck. They couldn't continue. So we started offering these developers innovative solutions. We called it the credit notes. So basically, if you are a buyer in a property or in a project that the developer is not able to deliver, they cannot give you money back, but they can give you a credit note. So we started actually trading these credit notes to other buyers who wanted to continue paying, but at a discount. I remember we did hundreds of millions worth of transactions on these credit notes during that time. We also started our property management arm. We started a whole legal and advisory and consultancy arm. And all of these worked very well. We also offered a lot of consultancy to developers. I remember I was assigned to help a lot of developers restructure their companies during the crisis time. And that generated a lot of returns for us. Expanded our network, gave us more access to these developers, and we strengthened our relationships. Another aspect from a CEO point of view, talent was available in abundance. Imagine before 2008, I remember when I was at Dubai Holding, I used to travel all over the world, and I used to offer people double and triple their salaries, because we were in a mode of hiring and we were not able to attract or find enough talent to fuel the boom that we were witnessing in Dubai. During the crisis, a lot of talent became available at very affordable rates. I started picking the best talent and hiring them, and some of them are still with me until now. And they're doing well, and we're growing together.
Now, you've seen the market crash and come back more than once, financial crisis, COVID. We're now in the midst of geopolitical conflict. How serious is the situation beyond the headlines?
It's very serious. I mean, it's the first time we face such a kind of crisis at the heart of the UAE. So obviously, whoever tells you it's not a serious thing, no, it is a serious thing. In the beginning, we were all very scared. But the good thing about the UAE and the way the policy setters and the rulers handle the situation, they assure us very quickly. I mean, the fact that they went on the ground, we saw them in malls, we saw them in the World Cup, the Horse Cup. We've seen them in the street, and the way they handled the communication is actually something that we should all learn from. The way they handle communication during crisis times, it immediately dropped the fear, and we started having the confidence index going up. People started feeling more comfortable, more assured, and the proof is a lot of the airplanes that were offered to people who want to leave were actually leaving empty from different nationalities.
It's true.
This is how the situation was handled from a communication point of view. From a real estate point of view, of course, there was a shock in the beginning, but it created a lot of opportunities. We started seeing a lot of new demand. People who were sitting on the fence thinking, the market is already going up for 3-4 years. Remember, from just going out of the COVID situation, everybody anticipated that the market will go down.
No,
it started going
opposite,
up because, again, the UAE handled the situation very well. The market kept growing year on year, and some of the buyers felt left out. They felt it's too late. I can't afford to buy a property. Now they're thinking, you know what, this is the best opportunity. I need to jump on it. I have to capture it. And this came, and it was coupled with a lot of smart offers from developers. We've seen a lot of developers coming out and saying, look, we're going to give discounts. We're going to give flexible payment plans.
Properties in some parts of Dubai are selling for as much as 20% below asking price. What does that mean for buyers, and what does it mean for sellers?
In terms of pricing, we have to distinguish between rental prices and sale prices. The rental market is still going on very strong. We manage almost 18,000 properties in the company I work for, and we have an occupancy rate of 99 to 100% currently. And we're not dropping prices, but we're becoming more flexible with the payment plans. This is the situation with the rental market. When it comes to the sales market, yes, there were segments and districts in Dubai that were affected, and some of the developers or the buyers who bought were forced to offload at a discount. For me, these represent a very small percentage of the market. I call them the speculators in the market, and even the developers who offered these discounts, they're in a specific category. I would say it's the ultra luxury category. That usually and typically gets affected during crisis times. The first thing people stop buying during crisis times is luxury, right? But the mainstream is still going very strong. I've personally attended a lot of launches in March, April. I just came today from a launch, and the demand is phenomenal, and they're all selling out.
When do you think things will return to pre-crisis levels?
Look, I wish I have that crystal ball. Nobody knows. It's like when people used to ask me, when do you think things will go back after COVID? Yeah. And we saw that it came back very quickly, right? Dubai recovers very quickly. Why? Because it has very strong fundamentals. It's like a human body. If your body has strong fundamentals, if you get sick, you recover quickly. And that's what we're witnessing in Dubai. I think the recovery will come very quickly, hopefully as soon as we get a clear announcement about the situation. But more importantly, I think we're going to become even the recovery that will come out of this crisis is going to yield very good results for the property market, because we used to hear people saying or whisper, look, yes, the UAE is very safe and Dubai is very safe. And Dubai and the UAE shocked the whole world of how strong their defense system is and how responsive they are and how they handled this crisis in a very impressive manner, honestly and objectively. So after this, I don't think anybody will have anything to doubt anymore. So the equation or the ecosystem of safety, and this is what the real estate market is built on, the confidence and the safety.
Looking at the market in Dubai now, which specific areas have been the least resilient and which have been the most resilient? And where would you look if you were a first-time buyer?
I would say right now, as I mentioned earlier, the ultra luxury apartment segment is getting affected the most. Affordable housing will always, it's actually one, we call it the defensive assets. They're assets that are typically perform well during crisis times. Any ready property that's generating yield or income is actually fantastic. The best assets right now I recommend for people to consider, they're ready properties with an in-house payment plan. So this is something very unique to Dubai, but it's very rare, where you find typically an apartment, for example, Natasha, that is ready, rented, and you pay for it over 5 to 7 or 10 years without banks. And this is remarkable because you can get access and own a property right now, which generates for you cash flow. And it's very important during crisis times to have cash flow without having to pay the full price for it. So this is, in my opinion, a very good mitigation strategy for anybody who's worried about losing their job, losing their business, losing their profession because of the crisis. Invest in income-producing assets that you don't have to pay for it upfront and gain all the cash flow from it right now. That's a very good strategy to adopt.
Now, in general, when buying a property, what's the real number, the most important number you should have in your head as a buyer beyond the down payment?
The most important number for me is the price per square foot, not even the down payment or the actual price. I can tell you right now, there is a small property that is selling for 600,000 dirhams. And you might think that's affordable because the down payment, let's say, if they offer it to you with 5% or 10%, it seems attractive to you, right? But the catch there is the price per square foot. Because if you look at the size of this property, you might discover that it's only 200 square feet or 250 square feet, which means you are paying more than 2,000 dirhams per square foot. I would rather pay maybe 800,000 dirhams and get a property that is 1,000 square feet rather than pay 600,000 dirhams for a property that's only 250 square feet. So that number is very important for people to understand.
You manage institutional portfolios worth more than $5 billion.
Correct.
What do those clients always ask you that normal buyers don't think to ask?
Institutional investors always worry about not keeping their money still. They always think, how can I deploy my money? Whereas with retail buyers, individuals, they always worry about, the first question is, please help me, I don't want to lose money. So you see the different mindsets. Mm-hmm. The retail buyers, they're always worried about, I'm scared, I don't want to lose money.
Fear,
and they try to keep their cash. They always say cash is king. They want to keep the cash with them. Institutional investors, for them, cash that is still is like water that is still. And it spoils it. Water, when it runs, it actually produces energy. And that's how institutional investors think. The more they keep deploying their funds and growing it, makes more sense to them.
When should someone just keep renting?
That's a very good question. You should keep renting in different situations, but the most common one, it's when the numbers don't add up. Let me give you an example. A gentleman called me recently from Saudi Arabia and he said, Dr. Mohanad, I want you to help me buy a property in downtown Dubai. I asked him for the details. He had something in mind. So when he sent me the details, I told him, no, you should rent it. He said, but I can't afford buying it. I was like, let me explain to you the numbers. And now you will see why I recommended that to him. That property that he was going to buy was offered for 20 million dirhams. But if he rents it, he can rent it for only 400,000 dirhams. So if you add up the details, if you look at the numbers, buying that property will save him 2%, right? Because 400,000 dirhams is 2% of the 20 million dirhams. I told him, let's invest the 20 million dirhams for you in properties that can generate for you 10%. That's 2 million a year. I will rent for you your dream home for 400,000 dirhams and I'll pocket for you 1.6 million dirhams. See, now it makes sense to rent, not buy, correct? Mm-hmm.
So now anyone can own a slice of Dubai property through this fractional property investment concept. Does that lower the risk or just hide it?
It could be related to risk mitigation or risk management because you're not putting all your eggs in one basket. But that's not the main objective of having it. The main objective of creating platforms like real estate investment trusts or crowd investment real estate or tokenization of real estate is to basically allow the masses to own real estate. In historically, only the rich were able to own real estate. Right now, people can start investing in real estate starting from $1 in real estate investment trusts or REITs, which are basically real estate funds that are listed in the stock market, and they invest in real estate and they manage it fully for you and they just give you a dividend. And you have the option, that's another advantage of investing in these tools, you can liquidate it quickly because historically also real estate used to be criticized as a heavy asset that you cannot easily liquidate. But with REITs, with a press of a button, it's like selling a stock. You can liquidate. Then the emergence of crowd investment came into the Dubai property market, where a group of people can own one property. So they split it into shares and we all chip in and each one of us will get their returns according to the share that we invested in. Most recently, the Dubai Land Department came up with the tokenization concept, which is very similar to crowd investment with a small difference, which is it's using the technology of the blockchain and you get an actual title deed issued from Dubai Land Department. With crowd investment, you were only getting a share in a company which is listed in a free zone. But with tokenization, you actually get a title deed from Dubai Land Department.
And you think now is a good time to get into it with some discount?
I think it's definitely a good time to get into it, but I have to highlight that everybody needs to do their homework because, again, these platforms, we need to remember and understand that they're offering their core product is not the fancy ads they do or the ease of access. The real product they're offering is real estate. So I encourage anybody who wants to invest in crowd investment or in tokenization, they need to study the actual property that they're investing in. The fundamentals has to be correct. Don't just look at how fancy the website or the app of that company is. Look at the team that will be managing it. What are their hidden fees, management fees? What are the charges they will impose at selling the property? What are the exit options for you? So look at these fundamental elements, not just the fancy ads that we see about them.
Absolutely. I want to hear 3 rules with rough numbers, okay? 1 for a first-time buyer, 1 for a landlord, and 1 for an off-plan buyer.
So for first home buyers, make sure you have at least 25% of your the price of your property ready if it's off plan. If it's a ready property, make sure at least you have 50 to 60% ready with you because then the banks will ask you to pay that down payment. With ready properties, the down payment is bigger. With off-plan properties, they should pay up to 25%. They should have it with them and make sure they covered or they studied their situation very well that they're able to cover the remaining payments.
1 numbers rule for landlords.
Evaluate your properties every year. And if the cap rate of your property drops below 5%, you should consider selling that property. As in, a lot of people buy a property, let's say 5, 6, or 10 years ago, let's say for $1 million dirhams, and they rent it for 80, and then the rents go up because of inflation and because things, go up in pricing. And suddenly the property now is making them 120,000 dirhams, and they think they're making 12%. Because they bought it for $1 million and it's renting for 120. But if they evaluate the property and get the real value, they might discover that this property now is worth 3 million dirhams if they sell it, which means they're making 120,000 dirhams of 3 million dirhams, which is a very low rent return. So they have to consider exiting from that property and reinvesting that amount in a better asset, performing asset that gets them a higher rental return for them.
And 1 rule for an off-plan buyer.
Make sure you have the right numbers. Calculate all the transaction fees, not just the down payment. Just make sure you plan your payments correctly. If you're taking a mortgage as well, just map out your financials very well from a numbers point of view. And always, for all of them, always look at the price per square foot, something I mentioned earlier today.
What is the biggest mistake you watch people make over and over?
I would say one of the top mistakes that people do is that they rush into buying a property. That's a point of collecting data, not purchasing. Because if you rush the decision, most likely you're doing a mistake. Another mistake a lot of people do is that they follow campaigns and ads. I always say the bigger the campaign, you need to worry more and you need to slow down because one, if the project or the product is very attractive, why are they spending so much on it, much? And second, the bigger the campaign, the bigger the cost on the developer. And guess who's going to pay for that cost?
You.
As a buyer, right? So I'll just give you a third one. Another mistake is that they seek advice from people who are not qualified. And again, I know there are a lot of real estate consultants or brokers in the market, but you need to pick the right ones, the ones that have the right experience, relevant experience in the asset class, in the area you're buying in. And also they have the academic foundation because it's a science and an art. It's like somebody, God forbid, feeling sick and going to a hospital and they tell them, we have a doctor, doesn't have a degree, but they have practiced for 4 years.
But he's on Instagram.
Yeah, he's on Instagram.
He's on TikTok.
Exactly. So, or the opposite. We have somebody who's a fresh graduate. Would you allow him to operate on you? No, I need somebody who's experienced, right? So this is just an example, and it is as dangerous. I just mentioned earlier, this is the biggest investment anybody will make in their entire life. Don't gamble with it, right? Always follow the facts. Don't follow what you see on social media. I encourage everybody who has an interest in real estate to download the Dubai Rest app. It's the official Dubai Land Department app. And they'll find daily transactions. They can research, they can check the historic data, rentals, sales, service charges, everything is there. Seek professional advice from qualified consultants and don't rush your decision. That's the best advice I can give them right now. And don't procrastinate because I mentioned earlier, Dubai recovers very quickly. I remember people telling me, I wish I listened to you during COVID and bought. You know, every quarter we publish a report. And I remember when COVID started, that report went viral because I called it the year of COVID, 2020. I called it the year of the brave because it was built on a very popular quote, Fortune favors the brave. Correct?
I love that quote.
Which is so true, by the way.
It does.
I've helped people buy properties during COVID. And right now, they're sitting on 5x their investments and 6x their investment.
It's insane.
I have other people who said, you're right, I wish I listened to you. So honestly, if you want to buy a property, yes, don't rush, but also don't procrastinate. Do your homework and just do it.
And what's a red flag that you would see in the way a broker advertises properties to buyers?
One of the so many red flags, but one of the most
I
common
want to hear all.
one
Let's
of the
go.
most common red flags I've been seeing recently is the overpromising for quick gains. Real estate is a long-term asset class. Most of them, the ones I'm talking about, they come out and they say, listen, just put a down payment and I will flip it for you after 3 months, 6 months, or before the next installment, or at handover. Worst advice ever. And I've seen so many casualties, so many people losing because of this approach. This is one of the biggest red flags we're witnessing right now.
What's the first question that a buyer should be asking their broker?
They should ask them about their experience in that specific district or asset class. And also they should ask about their academic foundation, relevant academic foundation. The most question I would say I want people to ask me more is, do you honestly and based on numbers believe that this is a good property for me or not? Because I see a lot of people buying properties because of the emotional aspects, not just the numbers. They get excited.
Prestige, image,
or maybe
status.
because they believe in happy wife, happy life. They want to please the wife. Or because they get excited. Somebody told them buy and I'll flip it for you. So it's mostly the emotions. I wish they actually do the homework. It's a very big investment. I wish everybody understands how dramatic and how important this decision is, and they really give it justice, give the whole process enough time and the pace it deserves.
Well, Mohanad Al Wadiya, thank you so much for spending time with us on
Thank you.
Money Moves, and it's been a fantastic conversation.
Likewise. Thank you very much.
Take care.